Good morning, welcome to the market view for Wednesday, the 7th of May 2014. Starting off with the 30-minute chart from yesterday, we can see the market moved just under 100 points yesterday, but unfortunately didn't give a potential buy signal. Now, the reason for this is that the market didn't actually have a pullback to give a turning point, as the market actually just broke out of this sideways range. You can see here on Monday, the bank holiday Monday, where the market moved lower and then produced the buy signal. But unfortunately yesterday we didn't have this opportunity. The market didn't pull back first, give the buy signal and then move higher. It was just a case that it just decided to go yesterday morning after recording the market view and continued in the one direction. You can see that we have some potential weakness just here with the selling coming into the market. But notice in the bar following, we see the market then trading up towards the 169.50 area here, and then just driving through this as well on this increase in volume here. So the selling disappeared in this area here. You can see that move, or rather show this below the average line. So at 169.50 the selling disappeared that we saw in this area here as the market moved higher, and then prices drove through the 169.50, which is what's required in order to drive through a resistance level. And then we see a bit of selling coming back into the market. We see the red volume with the green candle, and then the potential weakness. The market trading up to 169.95, just below the 170 level, which I spoke about in yesterday's market view. And it's just a pity that the market didn't give us a pullback first before moving higher. And this is due to the bank holiday. The market trading quietly the day before, and then the traders just coming in and just pushing the market in the one direction. Fortunately, this is a rare event, so take heart. It's just the odd exception where this actually happens, and it generally occurs after a holiday, bank holiday type of affair, because it allows the market just to push the market in one direction and having positioned themselves the day before when everybody else was away. So like I say, don't be too disappointed this happened. It's the same in the euro. We see this move higher as well. The only thing here was we got the market coming off the DP level and then moving higher and trading up also to the 139.40 area there, and the Oz dollar doing the same. You can see this just staying above the 93.50 area here as well. But again, in the lows you can see the market on the overnight trading higher and then finding support in this area at the DP level, which is also the same as the euro as well. Notice how this found support at the DP level, and just to go back to the 30-minute, also finding support at the DP level, which is of course the daily pivot. And the rules for that, just to remind you, are that if the prices are trading above, then they are bullish, and if below, bearish. So again, you'll notice this pattern within these three markets here. A bit more selling around in the Oz dollar. You can see a lot more red bars than we actually had in the 30-minute pound there, where it was just green, apart from a bit of red in this area here, and then the market trading all the way up towards that 170 level. Which then brings us on really to where will the market go to from here. And just before we leave this chart, notice that the market, having nearly traded up to the 170, is now stuck in this sideways range. So let's have a look at the bigger picture in the daily chart. Now what I've done here is compress all of the prices, so this turned into a line on close chart. And I'm just going to remove this line here so we can see where we are. So we're currently trading around the 169.70 area. We can see that we've taken out this to the left here, which is a 66 98 area as well. So that's been taken out. We've taken out the resistance here. So I'm just going to drag the chart along, and we can see this is where the market's currently trading with this dotted line. So now we're back to the October 2009 level, which we can see in the date and time at the top there. And moving it over, we can see that sort of the next upside target is going to be around the 186 level. And then beyond this, we're heading up to the $2 to the pound, which is where we were at in 2008 prior to the market trading all the way down to the 137 level when we had the credit crunch there. So you can see there you've got that sideways spiraling in the bigger picture where the market is likely to continue to move higher in the short term, trading back ultimately to the pre-crash high of $2 to the pound there. So just before we close, let's have a look, see what news we've got out today. There's only medium impact news items there. We've got Halifax there forecasting that the house prices are going to continue to move to the upside, and there's no surprise there based upon the lunacy of the government now using taxpayers' money to fund mortgages just to keep the illusion alive. And then at 3 p.m. Yellen is going to testify, so it'll be interesting to see what she's got to say. So this one I would say be careful, because she can't make up her mind whether she wants to print more money or to continue with the tapering. So in my opinion, there will never be any tapering. It's a case of just keep printing and keep the illusion going that everything is fine. But that's a different story, so watch out. 3 p.m. Yellen speaking and testifying there before the committee. Right, well, that's it for this morning. Like I say, take heart. Yesterday there was a rather largest move. Unfortunately, no indication, and that's purely and simply, as I stated earlier, that we didn't get the opportunity of the market pulling back first. It was just took off, headed in the one direction, and that is generally something that happens after a holiday, simply because the traders are able to position themselves in the quieter markets ready to make the move the next day, which is what we saw during yesterday. Right, that's it from me. All things being equal, I will see you in tomorrow's market overview. As ever, thank you for your support and also for watching.